What is up, everybody? Welcome back to another episode of Real Estate Served on the Rocks, powered by Fathom Realty and Keller Williams Downtown. My name is Charlie Sardelli, and as always, I'm here with
Jameson Amaros.
And Jameson, where are we at?
We are at the Rouge Bourbon Bistro, located conveniently off of Arapahoe and I-25 in Greenwood Village. And if you guys like bourbon, wine, drag shows, good food, one wall, a Roaring 20s vibe, just come on down.
Make it down here.
Yeah, I
Make
don't
it
know
down
what to tell
here.
you guys.
And if you guys are on the video version, you can see that Oscar is not sitting in the third chair today.
He's not.
But we did bring in a special guest for today's episode because the topic that we're discussing is wide-reaching. It goes over a lot of stuff. I'm going to go ahead and let him introduce himself. So who else am I here with today?
Yeah, hi guys. I'm Mason Polizzi. I work in the insurance industry, and thank you guys so much for having me on the podcast.
Absolutely.
I really appreciate being here. Excited to talk a little bit about insurance. So, yeah.
He's ready to get grilled, is what he's saying.
Yeah, I'm ready for the guys. Bring the hard pressing question. I'm here for
what is
it.
it?
The hot seat.
Yeah,
He's in the hot seat. Exactly.
Oh, man, no pressure. No pressure.
Actually, we could do the Kentucky Spanish Inquisition.
We could. And guys, as always, we love talking about everything real estate. But on this show, we drink bourbon and whiskey. And on today's episode, the bourbon that the rye whiskey that we have on today's show is noble. It's a special one.
It is noble.
If you guys are familiar with smaller distilleries that produce high quality spirits, you'll know High West. And today's bottle is no different. So the bottle that we're drinking today is the Noble Share from High West, and they have partnered with Casa Noble. And the cool thing about this bourbon is that it's a rye heavy whiskey, and it actually has been aged for 2 years in tequila barrels.
Añejo, tequila.
So Casa Noble does a 2-year aged añejo. And if you guys know anything about tequila, añejo is, I would say, like the bourbon of tequila.
Yeah.
Because most tequilas sit for just a year.
Yep.
What they do with theirs, and the reason this is called the Noble Share, is this sits in oak barrels for 2 years. So then what they've done after the añejo has sat in those barrels, High West has then bought those barrels and brought them over to do this partnership, and they then let the rye sit in those barrels for another 2 years in age. So this is going to be 104 proof. We're back above 100. So
I love it.
Right?
None of this 88 bullshit.
And guys, we don't, very rarely do we have people on the show as guests that don't also enjoy bourbon, but we actually went a little step further. If you guys don't remember, back when we were in the warehouse, the man cave, the bourbon man cave, we actually sponsored and
still
showed.
don't have an official name for that place.
No,
it was undisclosed location for such a long time.
That's a great name for a bourbon man.
It was. They didn't have a liquor license. Like, it was very bootlegger,
bourbon man cave.
very prohibition.
Prohibition. But if you guys remember, we had a bourbon on here that was made by a company called the Whiskey Cartel. Mason is actually one of the guys that is the reason that spirit was there.
Yep.
So Mason and his family have been in bourbon production, honestly, all spirit production for over 10 years. So Mason knows exactly what he's talking about. It's really cool. He's actually been through a full bourbon course. Tell us a little bit about it.
Yeah, absolutely. No, I appreciate it. Yeah, I'm glad you guys had that bourbon. I think you guys had
it was the executive.
Yeah,
Mm-hmm.
the notes of caramel in there. Yeah, I'm glad you guys had that one on there. What did you guys think of?
Oh, we rated it highly.
Yeah, I think
Did you?
I think we were at like a.
We did like a 2.8 or
2.8.
3.2.
That's awesome.
Yeah. And
Which
if you don't-
yeah,
which was
if you
Blue
should probably
Box.
explain that.
Yeah.
So the lower the number, the better. It's like golf. The lower the number, the
like
better.
it.
So it was a 2.8. It was a really good one. I actually also, rest in peace in Castle Rock, but we used to have the steakhouse down off of Founders and I-25. That was open for like 9 months.
Oh, it closed?
It closed like 9 months after they opened it. And they
we had our meeting.
they partnered with because I had the Whiskey Cartel tasting there as the bourbon flight that they had.
Nice. I love it.
Which was awesome. And then we went to go back, and they're like, "Yeah, we don't exist anymore."
It was ambitious. It was ambitious.
It
what
was
they were doing.
the famous is what it was.
The
They have a
famous.
really good one.
Yeah.
They've still got the one in Colorado Springs.
Okay.
It's been open forever.
Yes.
They just, for whatever reason, I don't know if it was the rent or the insurance costs,
So Mason, can you do me a favor? And because you've dealt with this, can you talk about a little bit about like what is that when you see partnerships between distilleries that do stuff like this?
Sure.
What does that look at like on the back end? You know, I said that they've gotten those añejo barrels from Casa Novella.
Castle Noble.
Casa
Noble.
Noble.
Casa
Excuse
Noble.
me. Excuse
Think
me.
noble, but say it Spanish.
Got it. Got it. Okay. Casa Noble. Can you, while I pour this out, can you just delve into a little bit? Like, what does that look like? How does that work?
Yeah, absolutely. So with that, I mean, I feel like it's just a partnership. So they took the High West, their rye, and you said it was in some sort of, what was the name of the barrel that you?
So it was
So it's
their
a
it was their
añejo.
añejo
Oh, the
barrel
añejo.
that they took.
Yeah.
So I guess my more so of my question is like, tell me about the barrels because obviously we all know how important barrels are to bourbon.
Absolutely.
But like, what
We
does that
actually
look
don't.
like on the
There's
back
a,
end?
There's a lot of people that don't understand the secondary market
Exactly.
that is
That's what I'm
bourbon
talking about.
barrels.
That's what I'm talking about. So
Yeah.
can you tell me like, tell us a little bit about like what makes barrels so important to distillation and why do companies partner with each other to do sherry casks and tequila and rum and all these different things?
Yeah, no, absolutely. Well, I want to talk about whiskey itself. Is just like the versatile way whiskey works right now. It's like it absorbs any flavor you put it with. So I'm gonna share an embarrassing story of something like how we figured that out, because most people are like, whiskey, yeah, it has different notes, cool, but how do you get those different notes? Well, when we were trying to figure out how to get whiskey out of a barrel when we were very first starting, we were just trying to, basically we dumped them over and it poured into a bucket, right? And we didn't realize just how much the whiskey absorbs the flavor of whatever it touches. So, I mean, really, with that being said, it kind of came out with like a plasticky kind of taste.
Yeah,
We're
that makes
just like,
sense.
oh man, we gotta be real careful. Stainless steel buckets. Gotta make sure everything that it touches is something we want the flavor profile to mimic. So, with this, for instance, I mean, I love it. I love what they're doing. I love what they are trying to do. So, I mean,
and it's
with
so
the
interesting
barrels,
too. Yeah, it's so interesting too because when you think of añejo being when you put it in that white oak to age for 2 years. Agave, that's what tequila is made out of. Agave is naturally sweet. So it's going to have, that's why with a lot of tequila, if you have a sweeter palate, you tend to enjoy it a little more because you get that sweetness. But the cool thing with the añejos is that they're aged longer in oak barrels. So now we have that sweetness of the agave and that complexity that you get a little bit of that spice, that more bold flavor in the agave, partnering with the more cutty and grassy flavors of the rye. I'm extremely interested to see because I know the nose on this when we just popped the bottle before the
I
podcast.
just got a whiff.
That's what I'm saying.
I smell it.
Yeah, we poured it out, and obviously, guys, this is a 104 proof, so right up our alley. I love the color and everything that it looks at, but guys, let's go ahead and get our noses in it and see what the notes look like. I'm so interested here.
Who were we? So we went to a whiskey tasting this weekend
Oh yeah.
at the Zeppelin station, and there's a bunch of different distillers that were there, and we were talking to the head distiller, or basically the founder of Breckenridge Brewery.
Yes. Mm-hmm.
And we were talking a little bit about the barrels.
We grilled them on the rum.
And we grilled them on their
the rum
rum
cask.
cask one. But anyway, he was talking about, and it was a quick conversation because there's a ton of people. But I think, and I'll ask this as just a fun question, but he's purchased barrels that are $1,800, $2,000
Nice.
of a barrel to make a specific batch of bourbon, right? And I know Whiskey could tell you guys purchase barrels,
Yeah,
right?
absolutely. Yeah.
Just out of curiosity, do you know what the most expensive barrel you guys have ever purchased?
Most expensive
Yeah.
barrel. We were able to purchase a Blanton's barrel. So
Okay.
you guys familiar with Blanton's?
Yep.
So I wish I don't remember exactly how much it
Yeah.
cost, but I know it was expensive.
A lot.
It was a lot.
Yeah.
So, but yeah, I mean, it was. We ended up putting our executive into the Blanton's barrel, and it's just been sitting there.
Yeah.
So,
How long are you guys going to age it, just out of curiosity?
it's been sitting in there, I believe, 2 years.
2 years
now. But yeah, I mean, going through like Charlie was saying, going through that course, it's so eye opening. Just the different barrels, the temperature you keep them at, the elevation you keep them at too as well.
Yeah.
It's just like one barrel, like 2 rungs up, could be relatively completely different taste profile than one that's on the bottom shelf on the right hand side, that's closer to the door.
Yeah, and the beauty of it is
incredible.
you don't really know
Yeah, and you don't.
because And I think we always talk about it's a labor of love, right, with barrels, because when you're aging it, like you're basically making a decision.
Absolutely.
And then you're not going to see that come to fruition for
Talk
2,
about an
3,
investment.
4, 7, 10 years, right? And you have to go about buying these barrels. And I've got a buddy of mine that hopefully this summer when he's in town, he's gonna come down. He works for Bardstown, and he sells and purchases barrels. That's what he does. And he's gone to Russia, China, Ireland, France, Spain, and he'll go and he'll research the type of barrels, because then his buyers will say, hey, we're looking for these type of flavor profiles for this specific bourbon that we're going to distill. We need this type of barrel. He goes out and finds it and then sells them to distributors. It's crazy.
And
it's
guys,
absolutely
just
insane.
as a side note on this, I don't want to take us away, but they are doing construction on the roof above us. So what you're hearing, don't worry, we're safe in here. I promise. Nothing's going down.
It's a war zone. Oh my God. PTSD.
It's just going to be a little bit
I'll
bit
be in
harder
the
on the
fetal
back
position
end.
in a corner.
Yeah, exactly. All right, so let's. We got our noses in it. We got it poured out. I mean, what makes me excited? I know it's a higher proof, but the fact that there is that burn at the front gives me a little bit of hope that this is going to open more, because what we've been running into recently is these bourbons and whiskeys they're light on the nose when it comes to the burn, which then almost leaves to no complexity, no growth throughout the episode. And with this one, I mean, it's incredible. The first sniff, it's like, okay, it's whiskey, it's there, but the dryness of the tequila, like that añejo, that it comes through, you get that little tinge.
Dude, I got a couple weird flavor profiles right off the
Yeah.
bat. But the first one's apple cinnamon.
Yes.
I get some really good apple cinnamon, like that fruit, but a little
Almost
bit
like
of sweetness.
almost like a plum, like
Yes.
yeah, right there.
I haven't done this in a while. It's just bringing me back childhood memory. But if you open a box of Fruit Loops and you just take a sniff of the Fruit Loops, like
That's a good
it
comparison.
smells like
Yeah.
like Fruit Loops or Lucky Charms, like just some like brand new box of cereal.
Yeah.
It's definitely complex, that's for sure.
The
Yeah.
sweetness is crazy. It's not, and you guys hear me talk about it all the time. Like the sweetness in this is not sugary.
No.
Sweet. It's 100% that floral botanical sweet, and you get a lot more.
It's
of
like
those.
maple, but directly from the tree without
Yeah.
any additives.
Yes.
Yeah.
It's so crazy.
Yeah,
This is.
apple cinnamon is-
I'm excited. This is gonna be good. We haven't had a tequila on here.
maybe
but
that's what it is. What was the cereal with the frog on it? There was like a cinnamon something.
Apple Jacks.
Apple
Yes.
Hey.
Yes. It's like Apple Jacks.
Like Apple Jacks. Okay.
Yeah.
All right. Well, let's go ahead and get the sipping. Cheers, gentlemen.
Cheers.
Dude, I'm excited.
Yeah.
I'm also very nervous.
Yes. Because I'm a tequila fan. And,
I'm usually not, unless I've had about 5 bourbons, and all of a sudden I become a tequila fan, like the other night.
Oh yeah. But Jameson did mention the whiskey tasting. Stay tuned, guys. We got a lot of good contacts to bring for
Oh,
you
yeah.
for the whiskey stuff. So and the bourbon. But yeah, I'm gonna go ahead and get this sipping. Oh man, Oscar, I'm sorry, buddy. You're gonna be real pissed that you missed this episode. Okay, so first off, the weight on the tongue is incredible. It is so light on the palate, and then I don't know about you guys, but even on the first sip, that's supposed to burn like crazy. It was like the botanicals at the front, and then as it went back, it's almost like that sweetness opened, and it evolved from like the botanical flowery sweetness
To fruit.
into fruit, into caramel, and now it's sitting on that vanilla at the back of my palate. Is that kind of what you guys are getting? What is it feeling for you?
Yeah, I feel like I get that really nice, clean flavor that I'm used to when I drink High West, and it's delicious. And then I got that char like right in the middle, which was kind of nice. Kind of went from like I got that rye. And actually, for me, like, the kind of that añejo on the backside, that
Yes.
sweetness, vanilla, caramel is kind of what I got on the backside.
Wow, and it's so funny too
It's like
because
I'm biting into an apple strudel.
yeah, well, and it's almost like okay, I know this is there's 4 years of aging total between the tequila
Yeah.
and the whiskey, but that oak comes through. Like, I will venture to say, we haven't had a bourbon yet where, to me, the wood was the star of the show when it came to the sweetness profile.
I disagree.
Which one was it?
Elijah Craig, Private Barrel Select.
Okay. Yeah, that one.
That was
yeah,
one that
yeah,
had.
You're
like,
right.
you knew it was a 3-char, and it had those. I mean, you could taste it.
Yeah.
From the start of the bottle to the finish.
This is gonna be great.
I will say this though about High West. I've had a lot of High West.
Mm-hmm.
Midsummer Night's Dream is obviously one of my favorites. I was assuming that with the Añejo, Casa Noble Añejo barrels and the aging and how sweet agave is in comparison to a rye, I was kind of expecting the High West portion of it to just kind of lose, like you just kind of lose it in the sweetness. But I mean, I would say this is more High West with a hint of Añejo versus the other way around. Even though they've been aged basically the same amount,
The Añejo,
but the flavor
enhances
profile
the
of a
sweetness.
good High West bourbon is still there.
Yes. So just to give an idea, the mash bill on this is the High West Distillery rye, 80% rye, 20% malted rye, and then the MGP rye, 4 to 10 years old, 95 rye, 5% malted barley. So like they have literally crafted this specifically to
So
complement
it's
that
two
agave.
different mash bills with the Añejo.
To complement
That
that
makes
agave.
sense because
yeah.
they're using the malted to kind of
the higher malt to pull out
to
that
give
sweet.
it almost gives it like a nice transition feel.
Yeah. Oh, look at us. We are. Dude, wait for it. Wait for the notes on the palate. You smacked it on the head.
Let's see it.
So the nose,
Yeah.
ripe mango,
Okay.
ruby grapefruit. So
Yep.
we got those
Yep.
fruity, spiced apple cider, Piloncillo sugar.
I love Piloncillo sugar. I don't know what that is.
Probably a
Sounds very
nice,
Hispanic
nice
and fun.
Hispanic sugar.
Yeah.
Allspice berries and anise.
Okay.
So anise is that one
Yeah.
that gives more of that like cardamom.
Yeah,
Correct.
almost the
Yeah.
black licorice kind
Yeah.
Yes.
Mhm.
Yep.
And then the palate is baked pear, charred peaches, ginger molasses cookie, freshly fried churro,
Yep.
orange blossom, cinnamon bark, black licorice,
There it is.
oak, and leather. That and honestly, a lot of the times it's you hear the palate from these companies and you're like, maybe. This one's
I
Actually,
can-
it's dead
spot on.
Dead on, for
Yeah.
sure.
And with the mash bill, they've definitely done a phenomenal job of comparing them and bringing out that añejo. So I'm so interested to see how this opens. JC's glass is gonna be
Fire.
great. Yeah,
Dude, this is
this is gonna be cool. This is good. Chris, as always, thank you. You know,
he redeemed himself. Okay.
Yeah,
Last week
last
he left
week-
us hanging.
well, no, because
No.
to give you guys, I know we gave that whistle pig last week a run. We beat it up a little
We
bit, but
put it to pasture. Is what we did.
After the episode, I went into Chris and I was like, "Hey man, this is what we rated it." And I asked him, I was like, "So what would you rate it?" And he was like, "A 3 out of 10, not on our scale,
On a
regular
normal scale.
on a normal scale, 3 out of 10." I was like, "All right, thank you." So he's like, "Yeah, I just wanted to give it to you to try it. There's no reviews on it, so hopefully we don't hurt you too bad."
Yeah.
Whistle pig, but
Yeah.
High West is bringing it back.
Yeah.
We're back, baby.
Exactly.
All right,
Yeah,
so
that 10-year, I was so excited too. It was the
Yeah.
weirdest. Have you ever had? Well, you had it. I don't think you would have had it because
No.
it's brand new. But it was a 10-year whistle pig.
Really?
And they used two different chars.
Okay.
So one char on the top, one char on the bottom. They called it snout to tail. Kind of gimmicky,
I like it.
right?
It's a clever name.
But dude, for a 10-year,
Yeah.
it not only did not evolve, it devolved
Really?
as we went through the episode. Like it actually got worse from the first sip to the last.
It
Okay,
did.
I'm curious. I need to go back and watch the episode. But what did you guys end up rating it?
Like a,
Six,
I had a 7.
6.8 and 7.
6.8?
It was.
Yeah, it was not.
If it was a 3-year, different story.
Yes.
Well, I mean, probably new.
But it was a
yeah.
$21 a pour,
Wow.
which is standard for a 10-year,
Sure.
right? But a good 10-year.
Right.
Like Eagle Rare, I think I can get for 18 a pour.
That sounds about right.
And that's a 10-year. And I would take that over that Whistle Pig.
That's
Literally 12 out of 10
crazy.
times.
Yeah,
It was
wild.
not good.
It was wild.
It was not good.
All right, so let's
This,
go
though,
ahead and
this is man.
it's a great whiskey to have for today's episode. And the reason I say that, guys, I'm going to be straight up with you. This is going to be information dense. The reason that we have Mason on is because Mason knows the ins and outs. His licenses in insurance range all the way from home auto to commercial and residential, all that kind of stuff. So wide range, health. I mean, he knows it all, and he's done it in such a short period of time. So when I tell you, like, you're getting the we always talk about distilled knowledge. Jameson talks about, reading a book is somebody spending 400 hours. That's exactly what Mason is and why we brought him on this podcast. So we are going to put him through the ringer, but he did know that he was going to be sitting in the hot seat today. We sent him the topics beforehand.
Are we going to mention the fact that he's like 2 shades of red off from the commercials?
Right?
It's subtleties. We're not going to get into that, but yes.
Just saying, subliminal messages.
Yeah,
I
yeah,
love it. I love it.
It's a little Easter egg. Yeah, 100%.
With
I like
what you
it.
said,
I
yeah,
like
you
it.
know.
I like it.
All right, so on today's episode, what we want to do is kind of pull the veil back for you guys on home insurance and just insurance in general, because we're seeing a lot of news headlines that are really scary, and let's be honest, they're farming for your reactions. And if you don't know about insurance, then it looks scary. You're going to get angry at the insurance industry, but there's so much that goes into it that we want to break down for you. So first thing that we kind of want to talk about is just overall the insurance industry and trends that we see in the industry. And then kind of we're going to talk a little bit about the structure of home insurance, how that works, how do you get to the premiums that you're at, why are the premiums where they're at. And then Mason's going to be, the only way I can say, a gem, and stick around to the end of the episode because we're going to give him basically like a quick fire on ways that you can save on your home insurance and ways to capitalize with your home insurance. So you can fast forward to the end, stick through the whole episode, but just know that the information that you're going to get on today's episode is going to be extremely in-depth and should open your eyes a little bit to how the insurance industry works. So let's go ahead and kind of get into it a little bit. Mason, so tell me a little bit about kind of just home insurance in general. How you talked to us a little bit about about how it works with its expense rates and all that. So let's go ahead and can you explain to us, how does insurance pricing work? How does that, how do they gauge that? What are they looking at? That kind of stuff.
Yeah, absolutely. And after that intro, dude, I'm excited. I'm excited to share what I know, and I'm going to try to make it as easy and simple as possible, but still hitting the facts that everybody's wanting to know. So, but yeah, I mean, to answer your question, it's really a question within a question, because it's just like, why are they expensive, right? And then also, I really want to dive into, like, what are you paying for? Like, what's...
Yeah, exactly.
I mean, it really starts with, unfortunately, the insurance industry is, it's hard to understand. It's not super easy. It's not straightforward. But something I want to kind of go through because, there is a lot to cover when it comes to this. So, shoot, I don't know where to start. There's so much information.
So let's just start. Let's go through the experience. Okay. So I'm a new homeowner, and I need to get home insurance for my home with this mortgage that I got. I call you. What are we looking at? What kind of questions are you asking me, and why are you asking me those questions?
Yeah, no, absolutely. So, as a first-time home buyer, you probably spent a lot of time saving up to buy this house. This is now going to be your baby, and you want to protect that baby. So with that, I'm going to be asking you questions like, if you're going to have a mortgage. You guys are probably familiar being in the real estate industry, familiar with that, getting a mortgage, buying the house, that whole process. I'm not going to jump into that. But mainly, when it comes to insurance is there to give you peace of mind that you're going to be protected. Now, that being said, the biggest part of insurance is going to be your dwelling coverage. So your coverage A that you'll probably see on your deck page on your insurance. And I know we were talking about a little bit before, as you go through, you have coverage A, which is how much we're going to be insuring your primary residence for. And that's the dwelling. That's the physical wood, that's the drywall, that's the roof, that's the physical dwelling.
The structure
itself,
right?
Yeah.
Right.
Mm-hmm.
Now,
what we would call real property in real estate.
Nice. Actually, I love that term. Yeah, real property. So that's the first part, coverage A. That's probably going to be the most important part to most people, is getting that specific question right. And that coverage right. So that being said, I'm going to be asking questions like, when was the last time your roof was replaced? When was your utilities been updated? I'm going to be asking what the square footage, stuff like that, so I can determine how much it would take to replace your home the way it is currently today. So that's part one. So part one is your coverage. Second part is your personal property. So personal property, I like to explain it this way. You take your home, chop the roof off of it, right? Turn it upside down and shake it. So you do that, everything that falls out would be considered your personal property.
I like that.
Yeah.
Well,
That's a good image.
Well, when you go to closing, right?
Yeah.
There's something that every buyer and seller signs. It's called TD1000, and it's a real property transfer. And we explain it the same way. And we say, basically, if you empty your house out and you're buying a house, so let's say that you're buying a house that comes with a washer, a dryer, a refrigerator, a microwave, whatever.
Yeah.
Anything that's not permanently affixed, but it comes with the property, okay? That could also include a 1967 Chevelle if it's being transferred. That's why we do this document, right?
Okay.
Because what I tell people, when you close, you have to put what the value is of the property inside that's transferring to you. And when people go, well, I don't know what I should do. Like, what should I say? Take the house, shake it, whatever falls out. What is the value of those items? And the reason they do that is also for insurance and tax purposes,
Absolutely.
because they want to make sure that if I'm getting insurance on a car, on a house, right? But let's say the seller is kicking in a 1967 Chevelle that's worth $80, $90, $100,000. Well, if you don't add that and something does happen to the house when you insure it, guess what? That's not covered.
Nope.
But you're going to be like, well, what do you mean?
Yeah.
It transferred with the property. That's why we have that specific document in a real estate closing.
So no, I like kind of how you broke that down too, Mason. Is so basically, if somebody comes to you, what you have to know is about your house. What are the materials your house is built with? When was the last time it was updated? What does your fire protection look like? Do you know what the grade of your insulation is for fire protection? Those kind of questions are going to be the overall part of the value of the structure of your home. Second part of that is your personal items. So think your computers, your gaming stuff, your cameras. Like for me,
Furniture, clothes.
Furniture, right? Yeah. I had, my parents used to have an armoire that they loved that they got for their wedding that was worth a good amount of money. All of those things go into this. So just when you're preparing to talk to somebody about your home insurance, know what matters to you. If you have a fire, if you have a flood, or something happens to the home, what matters to you enough to pay for that to be covered? Now, Mason, what I kind of want to do is pull the veil back on that a little bit. So when let's say I just told you all of that. I want to cover my cameras. I want to cover my car, my computer.
Okay.
How do you guys price that? What does that look like on the back end?
On the back end, yeah, no, absolutely. So the way we look at it on the back end, and actually, there's actually kind of a cool little trick because, at some point, I want to talk about deductibles, right? Because that's price that's important to people because that's the price you pay if you have to file a claim. So, but, I mean, there's actually kind of even a cool way for, specifically, camera equipment or, laptops or, high-valued items. Like you said, you have the armoire that your parents left you. So, I mean, stuff like that. But, on the back end, most insurance companies, they have a tool, and most of the time it's proprietary, that as you give me all that information about your home, we input it into our system, and it pops out a replacement cost. So, and that ends up being your dwelling coverage, your coverage aid. But it's basically what the insurance company says, hey, Charlie, your home as it is today, we are going to give you, for rough figures, $600,000, right? Because that's how much we're estimating to replace your cost. If you were to have a fire and you would have a complete loss, I almost said the name of the company I work for. I have to be careful. It's a habit. It's a habit.
So here's the thing, just so you know, we can edit shit.
Yeah,
That's fair.
All right, I got you.
But yeah, the insurance company, they would go in and they don't give you a check. And that's what most people think. They give you a check. What ends up happening is they actually, that money goes towards rebuilding your house the way it is currently with all the construction codes and everything like that. So,
no, I honestly, I really like that little bit of insight there because, I know myself, not really being in insurance, ever really dealing with insurance at that level, you think that it's, a policy specifically catered to you and your materials.
Right.
But what's awesome is it's almost like a market. Like insurance companies have a baseline for everything. And when you're going through your policy, it's as easy as just checking a box to say, hey, this item ranges from this cost to this cost, and that's how we're going to build it in. Yeah. Right?
Yeah, and these proprietary tools that they use to get your replacement cost, it takes market value on lumber and man hours, labor, because all that stuff is really important when it comes to rebuilding your home.
Yeah.
Example I really want to use is, unfortunately, we had that fire a couple years back. I think it was 2020, 2022.
Boulder.
Marshall fires that happened, and it's absolutely terrible that all those people lost their homes. But one of the biggest things that most of the insurance companies saw was that most of those people were underinsured. Because it's been a couple of years, so the agent had reached out to them, they've done a review, and their dwelling coverage was less than what their actual replacement value on their home was.
Okay, so no, I love where you're going with this. I love where you're going with this. So I want to kind of give it a little bit of structure. We kind of just talked about when you're looking for insurance, the things that you have to keep in mind and what to tell them. And Mason, you could back me up on this. Know what is valuable to you. Know what matters to you whenever you're doing this, because like Mason just said, you can go down to individual items.
Yeah.
Like, and Mason and insurance brokers, Mason can walk you through and say, is this something you want insured, or do you have anything like China, right? Like specialty China from your family. I saw something recently where it's like, if you have obviously we have some stuff going on right now with wildfires, and one person took all of their China. I don't know if you saw this. They took all of their China and they put it in their pool to save it. So as the fire was coming through, even if it hit the house, it wouldn't go through the water, obviously, and it would save the China. I was like, wow, that's pretty inventive. That's a pretty smart way to do things. So going from there to, now let's talk a little bit about kind of how that pricing works, to your point. And so can you give a base level explanation? Because you said, there's a difference between your deductible and what's covered and the actual cost of your house. So can you kind of go into a little bit about that? How does that work between your deductible and the value of your home, stuff like that?
So when it comes to the deductible and the value of your home, there's a couple different industry standards right now. So you can either see a split deductible or a percentage deductible, like a single deductible.
Yeah.
So basically, a split deductible would be like wind and hail. So if you have a wind and hail claim and it's approved, you'll pay that percentage, right? And then they'll have all other be a different percentage, or it could be a fixed cost. Like it could be like 1,000, 5,000, 10,000, something like that. But you'll see a split deductible. So depending on what your claim comes back as, it could be wind and hail, you pay that deductible, vice versa. Now, on the other hand, we also see a lot of industry standards where it's just a single deductible, where it's 1%, 0.5%, 2%, all the way up to, I've even seen a 5%. So now with that, going to your coverage A, like I said, I keep going back to it. It's your most important piece. Say you have a $500,000, replacement value on your home. That's how much your dwelling is basically insured for. You'll see a 1% deductible, and it would be $5,000. So if you were to have a claim, you would pay that $5,000. You'd just be responsible to pay that first, and then your insurance company would take care of whatever the remaining damages are to indemnify you. So that word indemnify just means to bring you whole again. So to where you were before that loss. So
Got it. Okay. So basically what a deductible is a percentage of your overall policy that you pay up front for if something happens. So that's what you call out-of-pocket cost, right? Exactly. Is that deductible?
That's what you're
and
responsible
so
out of pocket,
exactly. So let's say to your point, we did 500,000. You have something happen, your home goes down, and you're going to pay $5,000, and then you're going to work with your insurance company to take care of that rebuild. Now, the one thing that you said that I think is extremely important that we touch on is the repair value of your home. And Jameson, we touched on this before we went live on camera, that the one big issue that we see, especially in areas like Colorado where people have equity because they've been in their properties for a long period of time, whether they bought back in 1970, 1980, whatever it is, and they just haven't stayed up to date with their insurance. They go, oh no, I own insurance, that's cool, and every year it renews, and they go, okay, cool, let me renew it, and it goes to the back end. But Mason, can you explain to me the difference between your policy amount and the real value of your home, and why that's important for consumers?
Yeah, so I'm assuming the dwelling coverage that you have on your insurance compared to the market value of your home.
Yes, exactly.
Yeah, absolutely. So there's a couple factors. Obviously market value is what somebody's willing to pay for your home. Now the replacement is what it would be replaced. So there's a couple factors like land. Land is not insurable. Sometimes if you're on 5 acres, I was actually just insuring a gentleman the other day. His market value on his home was $3 million, right? But he had this, it was like 2,500 square foot house on all this land. So his replacement cost is going to be a lot less than what his total market value is, because the land's not insurable. It's going to always be there in case there's a loss.
Oh, damn, that's crazy. And that's so interesting to think of, because like I know for me, when I go to buy a home, I'm going to buy the land. The land is what matters to me less than the structure, right? So what you're telling me is if I were to go buy and I have a higher acreage amount, but I only have a small, like a tiny home on that acreage, my coverage is going to be lesser because the insurance isn't going to cover that dirt.
Exactly.
They're going to cover the structure.
I mean, at the
Well, I
end of the
mean,
day, the dirt's
I'd
gonna
go
be
out on
there.
a limb and I would say that if you were involved in a natural disaster that essentially destroyed the land that you built your house on, you have bigger problems.
Yeah, well, no,
You know what I'm
it's
saying?
true.
And the reason
it's
I
just
say
so
that,
incredible to me.
no, the reason I say that is because, so think about it this way, right? From a coastal standpoint, let's say I have a house in, you're familiar with this, the Outer Banks. Okay, hurricane comes in, maybe it doesn't destroy the house. However, you've got natural erosion of the shore, and we've seen houses that have been built on that land. California, same thing.
Right.
The reason I bring it up is because if you're to Mason's point, you know, if you're an 8-acre parcel in Bennett, Colorado, there's not a lot that's going to happen to make the land unlivable, right?
Yeah.
You would be thinking nuclear waste, pollution, toxicity.
Well, and the thing
or
that
like,
I
you know,
think the
Thor
thing that
coming
gets
down
me
and
about it
punching the
though
land to the core of the earth.
is like so much of property value and market value for us, right? Like you talk about the market value of the home, it's what somebody's willing to pay for it. So much of our market value when we're selling a home comes from the amount of land that the home sits on.
Right. But my point is there are still cases where that does matter in the sense of if you're in California and you experience a landslide that your home was built on, guess what? Well, if that land's no longer there, you can't even calculate the rebuilding cost.
Yeah.
Right? Because the land that you initially purchased, A, wasn't insured because it isn't, right? B, the structure was built on, well, now the land's gone. So you have those natural erosion type things, and usually, obviously, it's on the coast versus in the middle of the country. But yeah, I mean, that's why they do replacement costs for the building versus the actual market value, right?
Yeah, and that's
and
a
here's
huge misconception in the industry.
Yeah.
So I mean, yeah, because like for instance, that guy's house is a lot cheaper to insure because it was on all this land. So he was like, why am I being insured for $3 million? I mean, I can insure you for $3 million. You're gonna be overinsured, which not a bad thing.
if you want to pay for it, it's your
yeah,
prerogative, right?
it's your
wallet.
money. I mean,
Yep.
But for instance, I mean, it was a lot cheaper. I think it ended up being about $1 million worth of coverage for him on that $3 million market, like valued property and house.
Yeah.
So yeah, it's definitely a different misconception that's in the industry. So
Well,
No,
take-
I mean that's
yeah.
great.
Take it a step
Yeah.
further, right?
Yeah.
Okay, so let's use the exact same scenario. Let's put that guy's house, again, we'll just go to Bennett, Colorado.
Okay.
However, on that acreage, he's either got livestock
Mm-hmm.
or crops, working farm. Now that land needs to be insured for their market value because it's usable and it's an income, right?
So I'm gonna dive real deep into the
Strap in, guys.
This,
grab your glass.
well,
of
I think
bourbon.
it's important
Yeah,
because
no, absolutely.
there's a
Yeah,
difference,
that's why we're
right?
here.
Yeah.
That's why we're here.
And so when it comes to like home insurance, it's dwelling insurance. So there's it's called HOs. You have HO1, HO all the way up to HO8. So I mean, this includes like rentals, rental properties. Like you're renting somewhere, or the owner has a rental dwelling. You have condo policies. You have ranch policies. You have homeowners, and that's what we're normally familiar with. So there's all these different HO policies, homeowners policies, basically.
Makes sense, the H and the O.
Yeah,
I got it.
HO homeowner.
Tracking
We're
baby.
realtors.
Yep,
we
I
got
love
it.
it.
I know what homes are.
Right? But yeah, so you have all these different HO policies.
Yeah.
So they're all catered to different kinds of properties. So like with like what you're saying with like that liability for the ranch,
Livestock.
the livestock stuff like that. I mean, we do cover detached structures like barns and stuff like that too. But yeah, so it would just fall under a different kind of homeowners insurance. It would just be like a farm and ranch policy instead of a homeowners. Like we're
So
Well,
I
and
want to bring this to light because we talked about this last year. I want to say it was last year. So for those of you native to Colorado or just knowledgeable about Colorado, we had the Superior fires, right? Up in Lafayette, Superior, near Boulder. And one of the biggest things, and I think this was a shock to a lot of people because this happened in 2021-ish, 2022. So it was right in that COVID weird paradox of the life that we had. And it came out that of those homes, right, depending on what the market value the market was for a price per square foot to rebuild, almost 70% of those homes were underinsured. Okay.
Wow.
So I want to ask you this, Mason, but this is kind of where my head is going. When we talk about the rebuild cost, I would venture to guess that in a normal market, had we not had COVID, supply chain issues, housing shortage, the whole supply and demand economic issue.
Yep.
Okay. Mm-hmm. I don't think those 67% of homes, 70% of homes would be underinsured because at that point, if it costs $250 a square foot to rebuild a house, it costs $250 to rebuild a house. In this scenario, you had an entire neighborhood wiped out, and that replacement cost, because of supply chain issues, because of labor shortages due to having to build more houses and not having enough houses already built, so that's where the labor is allocated. Yeah. That $250 a square foot, which everybody was probably insured for, right?
And that's normally like 200 to 300 square feet. Normally.
Jumped to $350 to $400 a square foot.
Wow.
And they were in the position where I would venture to guess that in 2020, if Mason went and said, hey, let me review your policy, not knowing that supply chain shortages were happening and lumber shortages were happening and tariffs were happening, you would have been like, yeah, you're good. Based on that $200 to $300 a square foot, you're insured. Yep. But now all of a sudden, 2 years after COVID happens, that's how delicate. And I guess that's my point, right?
And I love where you're going with it, only because like you get to see the symbiotic nature of a free market. Mm-hmm. And what I mean by that is you get to see like we in the home market here in Colorado, and we talk about this all the time, between 2020 and 2023 saw an unprecedented jump in market value of homes. It was something like 35 to 40% market value. And nobody planned for that. Then you add in the supply chain issues and COVID of not being able to get lumber and building materials. So now you have the home market increasing, the prices increasing on the home, the cost to build the home increasing, all within a 3-year span. And that's why I mentioned earlier about the time framing of owning a home, right? It becomes natural where it's up. I have my insurance, just let it renew. I have my insurance, just let it renew. But if you have events like this that occur, in 3 years, your home can go from a $500,000 coverage to a $750,000 coverage, and you may not be aware of that jump. Absolutely. So, like, Mason, can you dive a little bit deeper into that? We said, like, if you're a homeowner and you have insurance, how often should you be reaching out to your insurance company and asking, hey, should I be looking at this? Should I renegotiate with you guys based on market value? What does that look like as a homeowner? And let's say I make that phone call to you. What does that look like?
Sure, absolutely. No, that's a great question. Personally, I recommend every year, at least once a year, honestly, because like during COVID, for instance, or over the last like 5 years, it's like everything's been so volatile ever since like 2020. Yes. The last 5 years has just been crazy. So personally, I recommend, and this is something that we as agents really just recommend all of our clients, sit down with your insurance advisor, sit down with your agent, talk with them at least once a year. Because like you said, for instance, and during COVID, everything was so expensive. You're looking at going from a $250 a square foot cost to a $400. There are things in place that do protect against that kind of thing. And that's something I wanted to touch on too, is, once you're sitting down, like say me and you are sitting down, having this conversation, be like, all right, Charlie, over the last year, everything's a lot more expensive. We want to kind of look at your dwelling coverage, make sure you're properly insured. So in event of like everything's more expensive during COVID, we have what's called option ID. So it sits above your dwelling coverage. So your dwelling coverage is $500,000, but now you're looking, oh man, I'm about $750,000 now to replace my home. Option ID sits on your policy as it's increased dwelling coverage, basically. So basically, it instead of being insured at 100% replacement cost, it jumps up to the default is 20% above that 100%. So now you're looking at about 120%, just in case things are a little bit more expensive than you anticipated, or I anticipate as the insurance advisor.
So it's almost like a fail-safe built into a policy.
Exactly. It's literally a fail-safe. So, and I recommend it on everybody's policy I write. I always talk to everybody about option ID and option ID and
the second one.
There's another one. We'll get back to that one. Yeah. Anyway, so you go 20%. You can go 50%.
It's a
or
buffer.
75%.
Yeah. And it's a way to protect yourself against the unknown.
I like to call it COVID protection. I literally tell my clients that it's like COVID protection.
Right.
So well, it's a good way to put it into perspective.
So I'll ask you a question, sure, right? And I think this is important. And I'm not going to get political. However, we talk about option ID, and we talk about like people don't. The question, or I guess the sentiment
Sure.
that I get and you get from a homeowner's insurance or just insurance policy in general is people, they have a certain number and they've been told, if I buy a house, I'm going to have a fixed rate and a fixed monthly payment. And that's the whole idea of not renting because rent increases X, Y, and Z.
Right.
We're running into a scenario right now, right? And I'm going to use Colorado for an example, where that is true.
Yeah.
Like you can, there's your fixed rate is your fixed rate. However, the two variables are property tax and insurance.
Absolutely.
Right? And insurance can increase every time a policy renews.
Yep.
And we've seen in Colorado one of the highest increases in those premiums in the nation. Nationwide, we are currently sixth at a $600,000 higher price point as far as the insurance premiums go. We're sixth in the nation, right? There's a couple weird ones in there. Oklahoma, Nebraska's in there. Colorado is one of two states that are also above or better than the national poverty level, which is interesting, right? Mm-hmm. So my question for you, though, is in these year reviews, what would something like, I don't know, tariffs on lumber from like two of our biggest importing countries do to a replacement cost on a home?
Oh, I mean, 100% increase it. Yeah, easily.
But it's not something that's a natural disaster. It's not a COVID black
It's
swan
again,
event.
it's that market standard. That's exactly
again,
what.
So
we
what-
have.
so what's-
political? I mean, and
Yes.
we haven't quite got to the California fires. And
We'll-
stuff
we'll-
like
we'll
that.
get there,
And
yes.
I don't want.
We'll feed you, baby birds.
Yeah, just a little teaser.
But no, I want to know your opinion. Like when you have the, and I think it ties into your idea of like this is why you have the conversation every year, because there are things. So what is your opinion? If it's if tariffs are implemented,
Sure.
what does that do to replacement costs, to labor costs, to the price of lumber, all the things that go into if you, God forbid, if you have to rebuild a
Yeah,
house.
absolutely. So, I mean, those are all the things. So, I'm not an actuary. So, I don't do. I mean, I respect actuaries. Basically,
Dude, those guys are
smart
nerds, but they are so smart.
100% nerds. But I respect.
They
them.
could tell you, hey, if you jaywalk, but at this certain time of day, your risk of dying is 2.6%.
Don't even get
higher.
into like
Dude.
life insurance.
Dude, they're all
that
yeah,
is
yeah.
wild.
Yeah.
Wow.
Do you skydive? No.
Believe it or not?
How often are you walking down Colfax past 10 p.m.?
Yeah.
Well, which side of Colfax though? Is
Yeah.
it the east side of Colfax
You're
or the
right.
west side of
You're
Colfax?
There's probably a stat for that.
Yes.
Somebody's thought about it.
Oh yeah.
Yeah.
Yeah, an actuary drove down Colfax. Was like, I need to study this.
There's a lot of opportunity here.
Yeah.
Man.
But yeah.
I mean, all those factors. I mean, it goes into like, politics. Like what is tariffs, or whether or not it's how much insurance companies can increase premiums every year, or whether there is natural disasters. All those things kind of play a part. And actually, inflation's probably the biggest one that most everybody has seen on their premiums increasing year after year. Because ever since COVID, I know Jerome Powell, he's been doing press conferences from the
Love
Feds.
Jerome.
Yeah, I love it.
Shut his mouth sometimes.
Purple tie, fantastic. I love it. But yeah, stuff like that. I mean, I know they're starting to cut rates and we're starting to kind of get back. We saw unprecedented inflation during the last 5 years. Luckily, I think we're still, my opinion, I hope we're starting to come out of that. And that's why Feds are starting to decrease rates. But honestly, that's probably why most people across the country are seeing increases on their yearly premiums.
Okay, no, and I love it. And this brings us kind of into the hot topic, right, on the episode.
Hold on. I do want to just, I know this is more of a one-rock takeaway, but
Yeah.
I want to emphasize this because I think it's very important. We talk about financial literacy all the time.
Yes.
Right? And the problem when you have something like insurance, homeowners insurance specifically, or car insurance, whatever it is, it's usually on a 6-month rolling basis. And it's normally on an auto renew. So it's not something that you necessarily
front of
think
mind.
about,
Yeah.
right?
You
Unless
get the little email that pops up from your insurance provider. Hey, your policy's about to renew.
Right. So the reason I'm saying this is important is when Mason's talking about, hey, you should sit down with your insurance professional at least once a year, if not twice a year, because most of the time policies renew every 6 months, right?
Absolutely. 6
So-
months to a year, yeah.
6 months to a year. But things happen economically that we may say, oh, it's happening and my eggs are more expensive. Or it's happening and my gas prices went up. Like the everyday things that we deal with as consumers. But when it comes to your largest expense for most people, it's your home.
Absolutely.
And it's your mortgage payment. And your mortgage payment is what we call PITI, right? Principal, interest, taxes, insurance.
Absolutely.
Well, the principal and interest shouldn't change because you're locked into a 30-year. The taxes and insurance, something that can change. Taxes you can't do much about. Insurance you can.
Absolutely.
So if you are not having those semi-annual or annual meetings with your insurance professional, you are doing yourself a financial disservice, because things like implementation of 25% tariffs on Canada, 60% tariffs on China, right? Good,
All I'm
bad,
saying
or,
is-
listen, good, bad, or indifferent mean that your protection or your replacement cost is going to go up. And if your replacement cost goes up globally, if something happens to your house, you may find yourself in a scenario where you are now underinsured.
And one thing,
Knowledge not only equals power, knowledge equals savings, people.
Yeah, but go ahead.
absolutely. And one thing I just want to touch on that point, and I just want to take a huge step back, is just like, why do you have insurance? I mean, yeah, the law says you have to have it, you know, yeah. I mean, that's one piece of it. But what I like to say, you know, when you have insurance, insurance is, you know, insurance, right? You're protecting your financial future. And, you know, we are in the industry of predicting the future. And in that case, I mean, you want to sit down with your insurance advisor once a year because you want to make sure your financial future, because who knows what's going to happen. You can one day be driving down the road and prove that you're human, like I like to say, and, you know, unfortunately get in a car accident. Depending on what your insurance is, you know, it could really screw up the rest of your financial well-being.
Sure.
Same thing with your house. I mean, it's your baby. So you want to make sure that those assets are protected.
Well, and this is where I think that's a great leeway into kind of the next thing that I want to talk about. And before we get into this, right?
Sure.
I will say again, you guys hear me talk about it all the time. Hippie mindset. Like, right now, I don't have health insurance because in my mind I'm going, well, you know, I'm young, I'm healthy, and I go for my Adderall prescription checkup every 3 months, and it only costs me $120. I could do that, but I'm not accounting for that what if. And let's be honest, I got in a car accident a year and a half ago now, where I totaled the car, and my shoulder was already previously hurt from lifting and working out, but the way that I hit and the seatbelt hit my shoulder, it hurt me even more and kept me out of the gym. That was a moment for me where I was like, oh shit, insurance isn't just for the what if. Insurance is that moment of like, I'm backed up. And the reason I want to position it like that is because I fear that insurance agents fall into, and just the insurance industry as a whole, fall into the same idea as realtors, as in like, oh, they're not worth the money. Insurance is not worth the money. And then now we're coming into these headlines of, and we touched base on it, California wildfires, insurance company pulled out this time, that right before it happened, and conspiracy theories and this. And before we get into
You
this
don't
next
believe
portion,
in direct energy lasers?
or the government controlling the
There's
weather.
a reason that all the blue umbrellas in Hawaii survived, okay?
Yeah, I was wondering about that.
But
Come on, Charlie.
I want to preface this and say, guys, the reason that we have Mason on here is because Mason is knowledgeable and he's willing to break down the actual questions that you have. So by no means, please, no hatred towards Mason, towards the insurance industry as a whole for the topic that we're about to discuss. As you know, on this podcast, we talk statistic, we talk facts, and we do not come from a place of emotion, because the second you start to do that, you're going to lose. You're going to lose monetary, you're going to lose knowledge, you're going to lose just all around the board.
Can I do a quick aside?
Yeah,
The
go for it.
conversation you guys heard me having before the
Yeah.
podcast, right? I was talking to my client, and he's got some renters in a current house, and we want to list it. And he was like, well, you know, what do you think we should list it for? So on market, it's between $825 and $850, right? And these guys love the house, their kids live there, they love the area, blah, blah, blah. And my client goes, yeah, just, you know, what do you think we should give them as a number? And I was like, well, Jason, what do you want to give them as a number? He goes, well, I wouldn't call you if I knew the number. I go, that's fine. I say $845, $850. He goes, that high? Mm-hmm. And I go, well, yeah, let's look at the facts. The facts are, we can go open market and have multiple people, right? You've got tenants that are telling you they love the house, they love the area, their kids love the area. So if they love that area and their kids love the other area and the house and everything else that it offers, somebody else will. And I go, so to me, it's leverage in a business transaction, right? Mm-hmm. That is a statistic. If we go on market, there are going to be more people like your tenant that want to purchase this house. Therefore, it would drive the property up, right? And he goes, see, this is why I call you, because I'm too emotional with these decisions. And I'm thinking like we should blah, 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 blah. And you're sitting there going, well, it's your asset. My job is to look out for you as my fiduciary. And this is what you've told me your goals are. So let's get to that goal, right? Like that's how we like to approach everything in this podcast. We'll throw out some different things around policies and whatnot. But if you notice, when I said political, all I said was there may be tariffs. And if those tariffs get implemented, what is the actual real result? Not if I agree or disagree, but for you guys as a consumer, the reason you meet one time a year is because when those things happen and you may not be paying attention to them, but your insurance agent is, and they're going to say, hey, you know what? Here's the landscape. This is what I think we should do. Now it's your decision to take that information and figure out what you want to do. But that's why you deal with professionals
in that industry. Now, okay.
that also care about you as their client.
We talked about your home insurance, how it's priced, what you should look at, what to take into account for it. So Mason, all right, man, tell me, what makes insurance companies pull out of areas and what makes costs go up?
That's a great question. I think probably 80% of the conversations I have over the phone are probably based off upon that. Hey, I'm calling because I want to check and see if you have a better price than the company I'm currently with, because they just increased my premium by $2,000 or whatever. So,
and we're also in a state, you also work in a state that has seen insurance companies pull out.
Oh, absolutely.
So can you give us, I want, again, be as direct as possible, talk fact, statistic. I want your knowledge and the reason why from an actual standpoint, not, oh my God, these insurance companies only want your money and they planned for this to happen, so they took your insurance away so it cost you more. No, at the end of the day, insurance
Direct
companies...
energy weapon.
Yeah, they're businesses,
Laser
right?
beams.
So please, Mason, give it to me. What does that look like? Sure. Why does that happen?
Yeah, absolutely. So why do they pull out of areas? Why is it more expensive? Where I want to start with this question is when you choose a insurance company, there are a lot of them out there. Now, not all of them have a great financial standing, or they're not reputable. Now, there is a way you can go in and you can check how secure an insurance company is. There are ratings. I mean, you guys have probably heard of, there's like that, the S&P, you have the Moody. They rate these insurance companies on like you'll see a double A, a triple A. You'll see then it goes down to B, C, and then you got some bad ones out there. So, I like to start with saying that, because once you choose the right insurance company and they have they've had a long track history of paying out on their claims, they've also have enough backing, enough capital to pay out on these claims. That's the first place I want to start, because that really determines where companies are able to insure. Because at the end of the day, it's all about risk and risk management when it comes to insurance companies. Like I said, we're in the business of predicting the future. Now, here in Colorado,
that's a line and a half right there. Yeah. I love it. We're in the business of predicting the future.
That's what actuaries do.
That's what actuaries do.
Yeah.
So
I love it.
That being said, there are different fire areas in Colorado. Now, normally it's 1 through 4, 4 being the worst. Now that's now they don't really. So with those, it's really hard to determine your fire risk. Now, like I said, these are all just statistics and all
based on market
facts. Well, based on just weather patterns too as well.
Sure.
So like fire is one of our most tragic and biggest. Well, outside of wind and hail, it's one of our biggest risk factors that we have here in Colorado. That being said, like we saw up in Lyons this past year and Longmont, they had some fires up there, and it burned down a lot of homes. Right now, unfortunately, a lot of insurance companies are pulling out of those areas, because that's been, over the last couple of years, a high source of loss for insurance companies. Now, going back to increasing on premiums, they do spread the risk, stuff like that. But when an insurance company pulls out of an area, it's basically them saying, we can't afford to pay out on these risks. So, because there's just a high tendency. That being said, what a company determines what area to be at risk or not at risk, it's all statistics, it's all data,
Well,
it's all
and
them and all the actuaries trying
this
to
is
figure
something
out where.
I want to bring it down to a fifth grade level.
Sure.
Okay, and what I think the sentiment has been between big BlackRock, all these companies that have all these money, they're affecting the lower class.
Sure.
The one thing that I really want to highlight, and when I say bring it down to a fifth grade level, is okay, guys. Let's say we're on the playground in high school, okay, and you got one kid that is extremely prone to getting beat up, and you got another kid that can protect them, that can say, you know what, I got this, okay, but so now the kid who's more prone to getting beat up is going to then go to the protector and say, hey man, these guys are probably going to beat me up and I'm scared of that. Can you protect me? And the protector is going to go, okay, well, are they using fists? Do they have a gun? Do they have a knife? Like, what are the factors that are going into this? And if you say, oh, they're just using fist, that guy's probably going to step in and go, okay, cool, I can do that. I can help you. But if now you come in and say, no, this dude's using a 50-round drum and, it's not, I can't protect myself. That creates more risk for the protector, right? And now he's going to go, well, wait a second. I don't know if I can do that, right? And the reason I say it like that is because I feel as if we think that insurance companies as consumers, and again, guys, I used to think this too, but we think of them as just this separate entity, right? That, oh my God, they're a huge company, they have all this money. But at the end of the day, and we talk about this all the time, the United States is based on a free market. They are still a company that has revenue, that has costs, they have to pay their employees, all of that kind of stuff. So what Mason is basically saying is they don't have enough money stored in the back end to say, hey, we can't properly protect you and all of these people if this happens because we don't have enough money to cover that. So when you hear insurance companies are pulling out of areas, the news will make it sound as if, hey, your protector no longer wants to protect you. But you have to remember that we live in a money-based place. We live in a capitalistic society, and these are companies that rely on revenue and money to be able to do what they do. So please try and remove the emotion from it because Mason is going to get that phone call and he's the one that's going to get reamed on the other end of the phone because premiums are going up because there was a wildfire that happened and there just so happened to be gusts of wind during that time that pushed the fire through. These are things that we are not in control of, but we should be thankful that we have people that understand it to a level that can price us and put us in an area that we need to be in.
So let me break it down statistically. Not just numbers.
Yeah.
So let's say I've got a $650,000 house in Colorado, right? Mm-hmm. Average insurance premium on that home for replacement value is about $3,700 a year. Okay. So now let's say that $650,000 price point to rebuild that house increases at like a normal level for however many years you have the house, right? If I'm an insurance company and I'm taking in a $3,700 a year premium, if as the insurance company I have to, a claim is made, the house burns down, and I am now paying $800,000 out to that client to rebuild the house, okay? How many years does it take for the premium that I'm taking in to equate to the cost that I just paid out as an insurance company to rebuild that house if I'm paying $3,700 a year?
Over 10 years.
What is it?
If you guys, if you're not watching the video version, Mason's got the numbers
I've got
floating
it.
above his head right now. He's
100%.
doing the calculations.
You do like some sort of animation.
I mean, basically, let's just say that the replacement cost stays at $800,000, which it never will
which would
over
grow
the
over
course of
time.
X amount of years, right? Let's say it just stays at $800,000 from a $650,000 house. You would have to be paying that premium for 216 years for the break-even point of the insurance company giving you $800,000 to replace that house at $3,700 a year. Right?
Yeah.
That's the point. And we talked about this 2 years ago. I think at that point, the stat in Colorado was that for every dollar that insurance companies in general, the main ones, right? State Farm, Allstate, Farmers, Travelers, and there's one other. I forget what it was. But of
Nationwide.
Of those five. And Mason, you tell me if you think this sounds right. For every dollar in premium, for every dollar they paid out in claims, Those companies over the last 5 or 6 years have only gotten back 60 cents. And what happens to an insurance company if they're paying out more than they're bringing in?
Yeah, absolutely. The best way to answer this is, what are they doing with those premiums? So are they paying out on claims with those premiums? How? So basically, there's two different kinds of insurance companies. Now, there's stock companies who are owned by stockholders, right? And then you have mutual companies who are owned by their policyholders. I like to make the analogy of, stock companies are like banks, right?
Okay.
And then mutual companies, they are like credit unions, right? Owned by the members. So with that, it depends. I know it's such a cop-out answer, but it really depends.
It does. Yeah.
Because
makes sense.
the way it
Well, no, it
works
makes
is
sense. If you have a company that is backed by
Who are you beholden
stock,
to? Sure.
stock and money that can go, that can build around them without them being reliant on it, versus we can only afford the money that we have, that we're working with,
Right.
that we have in-house.
So the thing is, like, where's that money going? Is it going to pay for your stockholders, or is it going to pay out on claims? Now, both companies pay out on claims, but how much? Now, that brings down to a different point, and it's really kind of what you're leading to. It's called the expense ratio. So how much money does a insurance company bring in, and how much do they pay out on claims, right? So with that, normally a stock company pays out about 85%. That's what they shoot for, around 85 to 90% of the premium they take in, they want to pay out on claims.
Okay.
The rest of it normally goes to stockholders and whatever.
Profits.
Right.
Yeah.
Where mutual companies want to pay out more than they take in. So I think for a statistic, I believe so. With State Farm, I believe they paid out $53 billion in 2023 on claims. Now, that equivalates to, they took in about, pulling rough numbers off my head. Anyways, they paid out about $1.07 for every premium they took in. So for $1 they bring in, they paid out $1.07 worth on claims. Now, you're probably wondering, like, how did they do that, right? How are they taking in more money and
stay solvent?
Right. So that's kind of where the threshold they're trying to stay in. Now, they do take your money. We have people who invest the money, make sure that we stay profitable. And then, we try to pay out more money than we take in on our claims. So,
I mean, you would assume that just based on math, right?
So,
I think the important part is money's finite.
Right.
As much as people want to say it's not. So if you're paying out, let's say 7% on your dollar that you're bringing in, you're paying paying $1.07 out. You would then reinvest that money to at least get a 7% return to break even, if not more. Does that make sense? Is that right?
Yeah, that's right. And so that's the thing is, when you see prices increase, this is also another determining factor on your premium. So if prices increase, right? So we're paying now out more for those claims, right? But what happens if we take in more premium and we don't pay out on that many claims that year? So we have all this excess. Well, that's when you start seeing rate decreases. You start seeing prices of premiums go down.
Got it.
And it's really that.
It's just incredible. Like I was saying, the cyclical nature of what is the United States economy and everything. Like, it makes sense that in the last 5 years, between 2020 and 2025, we have had some of the biggest instability and unpredictability in our markets that we've seen the insurance. And honestly, this is like an epiphany thought for me, where it's, again, everything is so cyclical, and it's almost a perfect storm of like, hey, we've been paying more these last couple of years because we haven't been able to plan for these increases, these costs and supply chain issues, wars going on, all that kind of stuff. So, of course, that's going to lead to premiums going up and costs going up. But the second that we get some kind of regularity in the market, that then does allow for the companies to readjust and come down.
And that goes back to my point. We're in the industry of predicting the future, right?
Yes.
So that being said, I mean, to your point, I mean, who knows what's going to happen in the future? But we're going to try to do our best to plan for it. But if all things stayed the same, then you would see a regular increase or decrease,
a predictable increase.
Increase. Probably keeping up with inflation, keeping up with like the price of lumber and labor and stuff like that. But
oh damn.
Yeah.
Oh no. and the reason I say it like that is because, all right, so obviously we know that what we have going on in California right now is what they are calling the most costly natural disaster in U.S. history, right? And when you say, we try and predict the future, now I'm thinking, oh, shit. This is over $125 billion in estimated costs.
Over 150, I think.
Over $150 billion in estimated costs. And now we're coming up against what could be a limiting factor with the tariffs and the cost of lumber going up, all these things going up. Holy shit. Mason, and again, I hate to put
If
you
you
on the
guys want to
spot
know
here.
why we drink bourbon when we do this podcast,
This is why.
this is why.
Man, I hate to put you in the hot seat on it, but
No pun
in your
intended.
experience, yeah, exactly. In
Industry trends wise.
yes, what do you think? And again, this is as a whole. What do you think that this is going to do? What can consumers kind of plan to expect coming from insurance companies with this going on in California?
It's going to be hard to know what to expect with this one because this is absolutely terrible. My heart goes out to all the people who have been affected by this fire out there in LA. I mean, my uncle's out there. I have some family out there, and it's just been so scary. He's been trying to keep me up to date on just all this stuff going on, and like I said, my heart goes out to all those people. But what's going to happen? I'm going to be honest, I don't know. There's a lot of determining factors that are going on right now, like FAIR. So FAIR is a state-regulated insurance. So if you can't get it with the private industry, which would be like State Farm, Progressive, Geico, Liberty Mutual,
The big names nationwide,
private
yeah.
industry, right? If you can't get insurance with them, and a lot of them have been pulling out for whether if it's political reasons or just risk reasons, you can find insurance with FAIR.
Fair, just to clarify, right?
Yeah.
So that would be the same
Yeah.
thing as like insurance of last resort.
That's a
And
great way
it's-
of saying it. Exactly.
And it's funded by the state.
Exactly.
Not federally. It's funded by the state.
Yep. So yeah, and
Which if it's funded by the state, who's it funded by really?
still us.
Right.
Yeah,
taxpayers.
Yeah.
exactly.
Which
Taxpayer.
the only reason I bring that up is because people think, hey, this is a great idea, but then they complain about property taxes.
Yeah.
Well, and we're
Or
also
sales
seeing
tax.
we're also
Like,
seeing
it's
a
all-
shift
And you're still
politically
paying,
into
like,
sending
property
things
taxes
back
then
to
go
the states.
Insurance, but you're already paying.
Exactly.
Yeah,
Right.
It's a
Yeah.
whole
So
thing.
continue. Sorry, I just wanted to
It's a
clarify
great point. But yeah, with that, with how little reserve they have in the state-sponsored insurance, and then with a lot of the insurance companies pulling out, and I don't. This is what we call a catastrophe in the insurance industry. This is a catastrophe. At this point,
I guess what I'm getting to, Mason, is homeowners when it comes to home insurances and people looking at insurance. There's no guarantee,
right?
but start planning for this to affect the industry in a way that could lead to higher costs because there's so much money that is going to have to be pulled to support this recovery effort.
Yeah, and so that is very true. So there's a thing called reinsurance. So you have insurance, and then you also have reinsurance.
Yeah, I have this guy on more often.
Yeah.
You have my iPad. That's what's on.
Reinsurance, yeah. So I don't know.
Oh, because I was gonna go down that
For
road.
people who don't know what reinsurance is, so insurance companies also carry insurance as well for situations like this.
That was my point with the
Yeah.
whole money is finite.
Yeah.
Like you can't just print it. So
Yeah.
there's reinsurance companies that basically
Yeah.
buy into insurance companies.
So
Yeah.
it's almost like an umbrella policy, and I hate to.
Yeah.
We're going to throw a different terminology out here. Umbrella, it kind of goes over the top, right? So if you have things that exceed, kind of like the option ID, like I spoke about a little earlier, kind of goes over the top just for protection, right? Same thing with our umbrella, goes over the top of everything, and protects your liability. Same thing with reinsurance. It's an insurance that insurance companies carry in case things are catastrophic and they don't have the liquidity to pay out on these claims. So that being said, we'll see. We'll see how things play out in California with how much money the state has, how much money the private insurance companies have to pay out, how much they're able to get from reinsurance on top of that. So it's gonna be interesting to see how it's handled.
We also have to see if
Sometimes-
the federal government would get
I was
involved.
gonna say that too,
because
yeah.
we did see the recent news that there is some reluctancy and withholding going on when it comes to aid to California for certain reasons, whether they be political, natural, whatever it may be. But the whole reason I wanted to bring that up is because, again, everything is cyclical. We can't sit here and expect Mason in Colorado to say, that does insurance, to say, oh, no, for sure, there's this wildfire's going on, it's going to go up, and because of A, B, C, D, definitive reasons. You can't rely on any insurance agent to do that, because there are literal millions of factors that are playing into this.
And the best example of that is reinsurance,
Yep.
right? Because essentially what's happening is you've got private equity funds, individuals, companies that are pouring money into reinsuring insurance companies. But they, being in the insurance industry, are also mitigating risk. So if they believe, hey, based on pick a company's payout history of claims and where they insure and so on and so forth, we're going to charge them more money to reinsure them to make sure they stay solvent. Well, if a reinsurance company charges an insurance company an enhanced fee, that fee then gets passed on to the consumers, right? Mm-hmm. So for everybody, and the reason I bring that up is for everybody that is just complaining about insurance this, insurance that, blah, blah, blah. To me, and you made a great point, I feel like we're the scapegoats of the industry because we're the faces, right? Like the clients 100%. Talk to you, they talk to us. But at the end of the day, it is an economic viewpoint, a macroeconomic view of where this money is coming from. And at the end of the day, it's got to start somewhere. Mm-hmm. And every time you've got an increase in cost from the source, it is going to have a cascading and domino effect on consumer prices going from the funding to the end user, right?
Absolutely.
And I think, to me, that is very hard to quantify because people only see Mason. They don't see whoever reinsures the company that you work for.
Yeah, absolutely.
They don't see the investors that invest in the reinsurance company that you work for. But the money is finite. And the overall theme that I get is if you've got natural disasters, right? The only reason insurance increases premium-wise is because when a natural disaster occurs in a populated area, it's exponentially more impactful, right? Like if you got a tornado that wipes out 3 trailer homes in the middle of Kansas, nobody cares. Mm-hmm. You had a wildfire that hits Malibu on multi-million-dollar homes, people care. If you got a hurricane that hits St. Louis, Baton Rouge, Houston, you care. Miami, Fort Lauderdale,
or you get a hurricane that hits Western North Carolina. Right. That was nobody has ever planned for or thought would happen.
Or if you've got a hailstorm that hits the middle of Aurora, Colorado, and affects 30,000 homes, then you care. And that's the problem with insurance is you can't predict 100% where those disasters are going to occur. But as we continue to populate more and more areas of land across the United States, the likelihood of a natural disaster occurring in a populated area and therefore driving up insurance costs goes up.
And I'm sorry, I'm going to do this. If you watched last week's episode, we kind of broke down and we talked about the acquisition of federal lands. If we start acquiring federal lands in the Midwest where there is the most, and we have 90% in
most of it's mountain regions.
Yeah, mountain regions and like places like, again, Desert Valley where it gets to be 125 degrees. Guys, this is exactly what Jameson's talking about. Is it's great to have more availability, but there's so many things.
It matters where it's at.
Exactly.
What's the one principle of real estate? The one principle.
They're not going to build any more land.
Location.
Yep.
Right? If the only time I can build a subdivision with $500,000 houses in the middle of Rocky Mountain National Park, which, by the way, you can't do because of the cost of constructing, but let's say you could, where are most of the wildfires in Colorado?
Rocky Mountain.
Okay. So do you think that insurance is going to be absolutely insane? Yes. Yeah. Does that mean people are going to afford to live there? Probably not. So building houses there, is it going to help the housing market? No, the fuck it's not.
All right, guys. So we have done, Mason, dude, thank you so much. Wealth of knowledge, and thank you for sitting in the hot seat and taking the questions, because honestly, I don't know very many that would run towards it. No. They'd run away from it. Yeah. So thank you for that. But now I want to take it. I know we've kind of broken it down. We've gotten really serious. We've addressed a lot of serious stuff. But one big reason that Mason got into the industry, and this is something that I can attest to for him, and why Jameson, Oscar, and I got into the industry, and why you need to vet your people, is because he cares about his clients. Mason did my auto coverage, and I got asked more questions in 30 minutes than I had ever been asked by another company to get that coverage. And not only did he tell me what to look for and what things were, broke it down so I understood it. But he told me how to take advantage of it. Let's be honest, how to really work it in my favor. So Mason, what I want to do now is kind of give you the opportunity to give, because you've talked to me about it, give the listeners like 3 things that they can focus on to bring their home insurance down. What are some things that they can do? And honestly, Jameis and I are going to step back, and I kind of want you to talk directly to them as to 3 things that they can do to better manage their cost on their home insurance.
Okay. Yeah, absolutely.
Go for it.
First one's gonna come off a little cliche, but bundle, absolutely bundle. Bundle is the best thing you can possibly do. It's really the best way in the insurance industry to save money. So I know we talked about a little bit about the home insurance, but the auto too as well, a little bit of life. You mentioned health insurance. I mean, once that insurance advisor has your full insurance picture, I mean, that's why they do it. That's why they give you a discount, is because we have your full insurance picture here on kind of just everything, all the risks that are associated to Charlie, associated to Jameson, associated to me, you know. Then we can kind of just be like, all right, man, here's the best thing. We got auto, we got a home, we'll get everything taken care of, and then we give you, it's massive. It's like 15%.
The amount of epiphanies that I'm having on this episode, and it makes, because obviously
I just want him to say bundle Ruski.
Bundle Ruski.
Bundle Ruski.
There it is.
Yes. The reason I say it like that is because that, you know, obviously it's used heavily in marketing. Bundle your home, auto, and life, whatever.
It's all risk mitigation.
Exactly, and it's almost as if like, holy shit, if one place understands what my risk is driving to work, what my risk is in how risky my work actually is, and the location of where I live, if they have all of that information in one, then it's so much easier for them to do a risk assessment and then say, hey, it'll cost this to cover every element of your life. I never thought about it like that before. That nice. I like it. Okay, so first one, bundle because
everything.
Yep. I love it. Okay. All right. Second
thing, I'm gonna say here in Colorado, 55% of your claims are hail and wind. Hail and wind is is awful here in Colorado. We have so many hailstorms. I remember working at the bank, and every year at the end of the summer, we would have hundreds of clients coming to the bank with insurance checks. Like, I had hail on my roof. I've had hail on my car. So impact-resistant roofing. It's not talked about that much. I don't know if most people really know about it, but I feel like since 2022, impact-resistant roofing has been more commonplace. But essentially what it is it's just roofing with like a thin layer of, these roofers are going to get on me about this, but I believe it's just like a gel or something to put in asphalt
more
shingles.
shock
It's shock absorption. And
it's a compound they layer over it.
Yeah.
In if you're talking to a roofer, it's class 4 shingles.
Class 4.
That's what it is.
Yeah, I think it's 1 through 4 that you have, but mainly 4 or 3. Yeah.
And most roofing companies, if they're working with an insurance claim, there's a lot of them that will give you a free upgrade to class 4 shingles.
I know a lot of roofers, because we work with roofers all the time. They'll actually do free upgrade to impact-resistant roofing. But the savings on impact-resistant roofing is crazy. Like, I know.
Can you give me an example?
Yeah, like 25%, 25 to like 28% is the rate.
So hold on. So what you just said
couple
was
grand
for something that most roofing companies would upgrade you to for free, you could save a quarter of the total on your insurance.
Yes.
Now, granted, you got to figure out, to your point earlier, right, what the deductible is. Do I want to make a claim? Because if the claim is, say your deductible is $5,000, right, on a new roof, you get class 4 shingles, they save you 25%. You got to do the math, which again goes back to meeting with your insurance advisor once a year and ask them those questions.
Okay, so we got first off bundle everything.
Rooskies.
Bundle Rooskies.
Shingle Rooskies.
Shingle Rooskies.
Yep.
I love it.
And let's go ahead. What would you say a third one would be?
I would probably say we have bundle, we have roof. I would say sit down with your insurance advisor. I know we already said that, but make sure you're not overpaying for coverages you don't need, because there are
I love that.
coverages.
I love that. Go into that a little bit.
Most insurance
Coverage Rooskies.
advisors, or excuse me, just most insurance licensed specialists will just toss on your policy because that's what their boss told them to. Now, might get in trouble for saying that, but just go through your policy with your insurance advisor, because there might be some things on there that you're like, I have 5 cars. I don't need a rental vehicle, because if one of my cars breaks down, I'll just use another one. You don't need to pay for that. I don't know. It's just. It's
even
really
it's just no. That's a great
go
point.
through your coverages.
Yeah.
What about stuff like, so for example, let's say, and again, I don't know this, so I'm asking
Sure.
you, but let's say you spend money on a security system.
Okay.
Does that give you a discount?
Absolutely.
Okay.
Absolutely.
What about, I don't know, wind-resistant garage doors if you're in an area that's prone to high wind?
That's a great question. I have not been asked that one yet.
Yeah.
As we go through your replacement costs, I'm assuming that's probably going to lower the amount that you pay out in claims, and hopefully
I'm thinking
your
even
dwelling coverage.
Let's say you drive, right?
Yeah.
I would assume that if you have a dash cam,
Yeah.
you get a discount.
Oh my gosh. We're going to make this more than 3 here, Charlie.
Right?
Yeah. No.
Well, I'm just saying,
the
quick
that's
hit
It's like
stuff.
things like Snapshot or Drive Safe and Save.
see?
You know,
Okay.
just to name a couple.
Yeah.
Where they, you it's a little app that goes on your phone, and beacon goes in your car, and the safer you drive, the bigger the discount you get.
Yep. If you're in a wildfire area, right?
Yep.
So, like for example, I've sold in Bell Mountain Ranch, south of Castle Rock, and there's been no recorded wildfires in the entire area. Okay, there just hasn't. But they're all 5-acre plots.
Okay.
So if you do fire mitigation from the brush and you get that cleared, I would assume that would save you on homeowners insurance.
Yeah.
Right? Or if you replace your siding and you use stucco siding is fire resistant, that would save you on homeowners insurance.
Well, that's a very valid point. That's why I kind of like at the very beginning I was talking about your dwelling coverage.
Yeah.
It's the most important piece. But yeah, going through that, and that's something we do. It's called an IFR, Insurance Financial Review. Like I said, we do that every year, or you want to at least reach out to your agent at least once a year to do those. Because like you said, if you have a impact-resistant roofing and you're not getting that discount, or you're not bundling, or you updated your home with stucco instead of wood sheet wood.
Just as an example, when we talk about the bundling, like I have life insurance now only because Mason was like, "Hey man, I'm gonna be real with you. You're gonna spend an extra $12 a month on life insurance, but it's gonna save you $50 to $75 monthly on everything else. I recommend that." And I was like, it's a net $50 savings.
Dude,
a
I
month.
pay mine's
Let's go.
$17 a month,
Yeah.
and if something happens to me, family gets $1 million.
Yeah, exactly. And it's just I
And
don't
it
know,
saves them money on the insurance.
And you guys have heard me talk about this before. The reason I love this podcast, that we do this, especially coming from the mindset that I did even 5 years ago, is I have the opportunity to learn from specialists in the industry, from people that give me actual information. And it makes more sense to me. And again, Mason, thank you so much for taking the time to come sit with us. And you literally took time out of your work day, time of making money and helping people, to come sit down with us to divulge this information and be in the hot seat about some really hot questions. So, man, thank you so much. And guys, if you would love to get in touch with Mason, use him, ask him any questions. You can get in touch with us. Again, just for compliance reasons, we're gonna leave Mason's contact info out in the ether. But please reach out to me, reach out to Jameson. We all have his contact.
I love it.
and we're gonna let him. We will guide you to him, because as I came from Liberty Mutual and started talking to Mason and breaking things down, and again, we're on the phone for an hour, but that hour is saving me hundreds of dollars a year. So please take the time. And now I think is a great time to move in to what we call
You left Jeff the emu?
Yes.
Wow.
I'm sorry, but as somebody who's in marketing, Liberty Mutual, step up your shit. It's horrible. You're just trying to copy other agencies.
I think
Get
it's
fucking
fucking
original
fantastic.
with
I
it.
love Limu.
Get original with it. Get original with it. I'm sorry. Do something that Geico hasn't been doing for the last 25 years. But
Geico's got a stranglehold on marketing.
I'm
They
sorry,
really
but
do.
they do. But at the end of the day,
Did you see what I posted today on Facebook?
Yeah. As a
was my favorite
marketer,
group of all time.
get your own shit.
Mike.
But all right, so what we do, Mason, at the end of the topic for every episode, we do what's called a one rock takeaway, and our one rock takeaway is basically a concise thought from you at the end of the episode. So we'll go ahead and take it. I'm going to start with this one.
Okay.
Okay. We say it all the time. I say it, knowledge is power, educate yourselves. And I know that's a lot easier said than done, but I go back to the story of Ford when he was getting grilled on the
Assembly line?
No, when Ford was getting grilled in a court case about his knowledge about it's in I can't forget what book it's in, but Atomic Habits maybe.
Yes.
But he's sitting there talking, and they're asking him questions like, "How many people stormed the beach of Normandy?" And he just puts his hand up and goes, "Hold on. I'm gonna be honest with you. I don't need to know the answer to these questions because I could pick up my phone and call somebody who's a specialist in that area." My one rock takeaway is whether it's real estate, whether it's insurance, whether it's skateboards, like or custom glassware, call a specialist. Use the people who are in that industry that spend the time to know the knowledge because they will distill that knowledge down for you. And when you get somebody who is good like Mason, who cares about the consumer more than the pocket and understands the longevity of relationships and helping people, you will benefit in the long run just from working with somebody who is knowledgeable.
You took most of what I was going to say, so I'm just going to put it a different way.
Okay.
Have you heard the term or the phrase, jack of all trades, master of none?
Mm-hmm.
Right? And I think that's important because as we're talking about all the different influences and factors and everything just with insurance alone, right? There is a reason that you want to rely on somebody that's specialized. For example, I'm a realtor. I don't do commercial real estate. Why? I don't fucking know what I'm doing.
Mm-hmm.
But I can pick up a phone and find somebody that's an absolute magician when it comes to that. And when we're talking about your financial health in your family, your taxes, insurance, real estate, investments, budgeting, you don't want one person to be involved in all of it because they're not going to be good. You know what I mean? They're not.
If you go to a restaurant that has 150 things on the menu, you're going to have a worse experience than going to the restaurant that has 5 things on the menu.
So my takeaway is utilize the experts, and I emphasize the word experts, in the different areas of your life. Right?
Yep.
If you look at the most successful people on the planet, they have go-tos, experts, advisors in every different facet of their lives, whether it's insurance, whether it's real estate, whether it's photography, whether it's financial advice. Find those individuals and build a team, and that team will get you to where you want to be. Don't rely on one person that goes, I can do everything. Guarantee you they fucking can.
And they won't be able to handle it.
Right.
All right, Mason, what's your one rock takeaway?
One rock takeaway. Follow these guys for sure.
Hey, love it.
Because
This is a not paid for advertisement.
right? Because I honestly learned stuff on this podcast here, and I love all the information you guys have. And I
Thank
took
you.
a lot away from that. But yeah, it just I feel like keep learning. Never stop learning. Never stop trying to
Stay curious,
stay
right?
curious. Yeah, always put yourself out there and try to gain more information to honestly. Whether it's to protect your financial future or to just learn more about what's going on, and so that you
And again,
better protected.
Knowledge not only equals power, knowledge equals savings. People.
I would guess, and we should do like a street interview type of YouTube video, right?
Yeah.
But I would assume
Real
that
estate on the rocks
if
on the
we
run.
picked, I don't know, let's say obviously the highest per capita income is Douglas County, and within that you're probably looking at Cherry Creek, Highlands Ranch, and
Castle
Parker
Pines.
and Castle Pines, right? If there's no streets in Castle Pines, so let's go hard.
True.
But whatever. My point is, let's say we walk down Main Street, Parker, and I ask 100 people, hey, can you explain to me what reinsurance is?
Not know.
0 out of 100 people, unless we run into an insurance broker or somebody in the industry, outside of the industry, they would have no idea what that is and how it affects the insurance premiums that they are paying.
Yep.
So to Mason's point, that is why educating yourself on why things work is so vitally important.
Absolutely.
Yep. I love it. Phenomenal episode. Guys, again, Mason, thank you for coming on. I think now is a perfect time to move into the bourbon review for today's episode.
Oh, buddy.
Wow. Just, okay, so I have to, normally we don't divulge the cost until after the ratings, but I have to with this bottle because I don't know if you guys truly know what we're drinking right now. What Chris handed us for this episode. So retail for this bottle ranges anywhere between $285 to $330.
Dang.
This is, and the reason I said I have to give this, we have to talk about that beforehand is because the notable difference in quality between last week's bourbon and whiskey to this week's. All right, so as you guys know, my glass stays open. I usually only do one pour throughout the episode, so this one stays open just like JC's does, but I sip it, I swirl it, all that kind of stuff.
So real
and
quick,
the nose.
I'm gonna say this. So
Yeah.
this is what alcohol costs. I used to run a bar.
Yeah.
You bartend,
Yep.
right? So he said it was, what's the per pour?
So if you come to the Rouge, you can taste this. You can drink this. Like I said, $300 bottle for $34.
Cool. How many ounces are in here?
Oh shit!
What's a 750, right?
Yeah,
It's like
100 something. Honestly, I don't know.
Come on, Siri.
Let's see.
It should be like
I don't know the where is it?
21 ounces or
Something like that. Either way,
you know what?
there's
you
an
keep
amount.
talking. I'm gonna pull this up.
Okay. So while Jameson's looking up, you're gonna do price per pour if it was
Well, no. So what I'm saying is,
the juice versus the squeeze.
kind of.
Is that kind of what you're breaking down?
Yeah,
Okay,
kind of.
I like it.
So
I mean, but while you're getting that up, Mason, talk to me about it. You've had one pour as well.
25 1 ounce pours.
25
close.
25 ounces. Okay.
Okay.
Yep.
So 25 ounces at a $300 for $34 a pour. That's 8.8 ounces. So even if this bottle costs $300, they're getting almost $600 out of this bottle
Yep.
at $34 a pour.
It's
Just throwing it out there.
incredible. It's incredible. And
You
this
can
is-
control liquor costs.
I just love.
You can run a very successful bar.
Did you guys? Did you see how Chris walked out here with this?
Oh yeah.
He knew what he was doing. When he handed us this bottle, he was like, "I know what I did to you last week, so let's bring it back." But no, this is all right. So just the reason that I wanted to go over the cost is because I think the Heaven Hill grain to glass, that was the first bourbon whiskey that we drank where I was like, "Holy shit, the juice is worth the squeeze." Like the cost is worth it.
absolutely.
Obviously, this would be a bottle that you would buy for a very special occasion and share it with very special people. But the nose on this did not change at all. Like, the burn is still there. The flavor is
here.
still there.
Smell that.
This with
That's JC's.
JC's glass?
Yep.
Yeah, that's incredible.
Have Mason.
The fact that
it did not evolve. Or
Like,
sorry, it did not
break down.
break
It
down.
did not break down. That is like exactly what it was.
And that's been sitting open for what, an hour and 10 minutes?
These guys have sat with us for an hour 38.
Ooh, hey.
This is a long one. This is a long one. But no, it's the credibility to the value of the spirit and the liquid in the bottle. I mean, the nose again, it opened a little bit. It got a little bit sweeter. You get a little bit more of
did.
that.
Yeah.
But as far as the flavor, my goodness,
I've been sipping it through this whole episode,
And-
and it's delicious.
I wish I could like pause it on one point because there was a point where I picked up, I took a sip, and I was just like, "Oh my god!" You know, like, what was that?
No, this is
Like it's still light on the palate, but then that sweetness does open up to that churro, that añejo, that like the agave sweetness, almost that earthy botanical sweetness still remains, but does not overpower. Like it still evolves. It's still light on the tongue, hits the beginning with that spice, then opens up to the wood. Then at the back end, towards the back of your tongue, you get that caramel, and then it sits with that small tinge of the rye and the tequila, that I don't know, that dryness.
That añejo.
Yeah.
The añejo that's in there.
Yeah,
Absolutely.
incredible. Oh man, and you guys know me. I normally when a bourbon or whiskey is priced higher, I'm gonna sit here and be like, yeah, you. Nobody's paying for that. Honest to God, guys, don't forget, you can come to the Rouge and buy bottles directly from them. You don't have to go to a liquor store. You can come and learn about the bottle. You could taste the bottle, and if you like it, you could buy it directly from them here. We don't know what the price is that the Rouge sells it for. Just know that anywhere retail, it does go from anywhere, like I said, $285 up to $340, $350. But I mean, you're gonna pull an Oscar? You're gonna do Oscar? Okay. So Mason, normally when we do our Run Rock or our bourbon review, we do it on a scale of 1 to 10, 1 being the better, 10 being the worst, because the more rocks you put in the bourbon or whiskey, the worse it usually is. I want to get your inputs on it as somebody who works with bourbon, who understands it. Do you think that this is more of a gimmicky bourbon, or do you think that they achieved what they were going for?
There's so many things that goes into this, and I love what they've done with the bottle. Personally, I love the design, the features, everything they did with that is awesome. Like, I don't know if you could show, but on the top of the cap, there's like this metal stamp in there that's so cool. And then I think they got what they're going for with this, because it is just delicious through and through, all the way around.
Yeah,
like
the
color is beautiful.
It's amazing. It's not heavy. Yeah, I'm okay. So I'm gonna go ahead and I'll start with the rock rating. For the rock rating for this one, I am going to sit at a solid 2. If I'm honestly, I may go down because of the cost, and normally it's gimmicky. I think I'm going to give this a 1.7. I'm going to give it a 1.7 just because I love the sweetness on the palate, but you still maintain that bourbon. You still get the wood from it. And I think by putting this in those añejo barrels, the rye marries so well with the tequila that they accomplished exactly what they were looking for here. So I'm going to sit with a 1.7 for this guy.
I'm going to go with a goddamn. Okay. For everybody watching, it's a goddamn. It's a goddamn.
Yep.
Or a Dios mío.
I love it.
I'm going to go 1.5.
Yeah.
I think this is at least tied with the best bourbon we've had on this podcast.
Yes. Absolutely.
Even with the price, right? If I am sitting down for a good meal, I think you've got, because you go through food pairings, right?
Yeah.
Bourbon pairs with certain types of foods. Tequila pairs with certain types of foods. This is such a good marriage of the two.
Yeah.
And you can't, I would assume that if I blind taste tested somebody that was a tequila connoisseur, they might pick out the agave.
Oh, they 100%.
You know what I'm saying?
But
it wouldn't be overpowering.
No.
And if I gave it to a bourbon connoisseur, they'd be like, wow, that's different. But it's enough of a blend.
It's all complementary.
Yes.
It's the definition of complement.
I could have this with salmon, with steak, or with a goddamn flauta.
Yeah.
And I would be happy.
Yeah.
At 34 a pour, again, I'd look at what other bourbons are in that price range. Weller Antique 107.
Blanton
is one. Blanton's is you can find it's like 17 a pour.
If you go to the right place, most people take advantage of the.
If it's
of
17,
the bottle.
Blanton should be 17 a pour.
Yes,
Okay,
it
so
should be.
Yeah, it should. But if you go to Weller Antique, CYPB, if you go to
Even Pappy,
maybe the 10-year.
Yeah.
Maybe even Taylor.
Yeah, if you do a EH Taylor like their single barrel select, it's probably 30-ish, 25, 30, somewhere around there. I mean at 34, if I'm out and I want to just sip something that is going to, if I let it sit on the table and I just have one pour and it's going to taste better than it did at the begging, zero hesitation at 34 pour.
Yeah, honestly. I would. If I had a meeting with a senator, this is the bottle that I would.
Dude, you know what? It sucks. Is, I'm a Midsummer Night's Dram whore, right? I just love it, and I still get that taste, that flavor profile.
It is distinctively High West,
dude.
All right, Mason.
1.5.
What do you? So we got a 1.5, a 1.7. What are you thinking?
He's like 4. Fuck you.
I mean, after that one, oof, man. I mean, this is honestly just delicious.
Taste it though. Taste JC's.
Yeah.
And honestly, the flavor really hasn't changed, like you guys said, over the hour and a half that we've been here. Honestly, I feel like it's almost enhanced.
This is the one that would sit untouched, untwirled. JC's glass sits as our control.
All right, let me see.
Tell me that's not exactly the same as it was almost 2 hours ago.
Yeah, it's like fresh out of the bottle.
That's
right?
incredible.
100%.
Come on.
Amazing. All right, so what are you thinking?
Honestly, I mean, you guys have had a little bit more variety. I'm gonna give it a 1. Honestly.
Dude, I love it. No, I
don't.
Amazing. I don't disagree with you.
Yeah, that
anytime.
Yeah, that was. I think we have a new front runner.
I was hesitant because anytime, like, especially if you take two completely different spirits.
Yes.
And I know añejo is kind of the bourbon. Same with mezcal. Like,
Yeah.
mezcal is the Scotch, añejo tends to be the bourbon, and then you got reposado is the tequila. So normally when I have a bottle, it's like, all right, we're gonna go left field and we're gonna marry two very different.
Yep.
The way this was blended.
Yes.
And the way the flavor profiles fit themselves, I think they did a great fucking
Phenomenal, guys. If you've stuck through to the end with us through the entire beautiful topic, the information, this one was dense. And thank you for being here with us. If you made it all the way to the end of the episode with the review, just seriously, you guys have been doing nothing but supporting us over the last couple months since we've been at the Rouge. We appreciate you more than you know. If you would like to get in touch with Mason, in touch with us, please feel free to reach out to us at any time. We all have our own independent social medias. I don't know if Mason's going to share his, but you can find me. I did it. You've been calling me out on it. I did it. You can find me at Charlie Sardelli across the board, TikTok, Instagram, Facebook. Be prepared, guys. I'm coming out of a little bit of a funk, but we're going to give you a lot more value.
We got some big things coming too. There may be a change here in the future. I'm going to tease that a little bit.
Yeah.
There might be a big change.
But you can always find me at Charlie Sardelli or Instagram, TikTok, Facebook, Jameson.
Yeah. The Colorado real estate guy. Super simple. I think if you search it on Facebook now, it actually shows up as me.
Yeah.
So Colorado real estate guy. Otherwise, Jameson Amros on Facebook.
Yep. And again, you can always get in touch with Mason. Reach out to us anytime, 24 hours a day. Send us an email, text, phone call. You can reach us at resotr@themilehighperspective.com or give us a ring or a text.
720-584-3361.
Thank you guys so much for being with us. Stay tuned. 2025 is going to be a big year, not only for real estate side of it, but the bourbon side. We did some great networking this last
And
weekend.
construction side. Apparently, Pindustry is going through a whole ass renovation. So.
We're going to bring you a lot more value planned to in 2025. So continue, like, share, follow, all that good stuff. We'll
give
catch
us a
you
rating.
later.
That's important too. If you guys like what we hear, drop us a rating. 5 stars would be great. 4 stars, I'll find you family.
I love it. But on that note, cheers, guys.
Hey, cheers.
Catch you later.